complex supply chains, they will be with us.
You're very bullish on India.
Yes.
Why?
Well, you know, Eric, I think that there are two investment themes in India that I really haven't seen written about really anywhere, and I think are extremely important, if you don't mind. One is formalization, and the other is financialization. So,
formalization.
Yeah. So,
being the formalization of the informal economy.
Right. So India, like a lot of countries, has a lot of informal, they call unorganized economy. It's manufacturers, distributors, retail. And now that transactions are trackable and therefore taxable, the tax net is coming in on these unorganized companies that don't play by the rules. They don't pay their taxes. They don't pay by the environmental rules. And then with the goods and services tax coming this summer, again, tax net's going to tighten. This leaves opportunity for the listed companies that follow the rules, that pay their taxes.
To take market share.
To take market share. Like Page Industries, for example, makes jockey underwear. Right? Everyone knows jockey underwear. 60% of the underwear sold in India is made by this informal sector, and it's saggy, baggy underwear.
And a lot of that is going to go away.
It's going to go away,
What
and
about
Page can come in.
financialization? What's that all about?
Financialization, I think, is really important. First of all, only less than 1% of GDP is represented in the stock exchange. So it's tiny. You've got 98% of all the money has come out of the mattresses, into the banks. It's all there. And, Eric, 30% of Indians are millennials. They're between the ages of 18 and 35. They control 70% of household income. These are the guys that are in their prime savings years. They're putting money in mutual funds, pension funds, insurance companies, and the government has allowed those institutions to put more in equity. So these are the guys that are now starting to go into equity, and they're going to move the domestic market forward.
The Indian stock market is up 15% year to date?
Yep, it's at its all-time high.
But you make it sound as though, at least by your point of view, still undervalued.
More to run. There's more to run in the Indian stock exchange. So when you look at the price earnings to growth ratio, you still see the Indian stock market at about 1, and the U.S. getting close to 2. So it's almost twice as expensive for the earnings you get.
What about emerging markets as a whole? How much more room is there to run there?
A lot. That's even better. Their price earnings to growth ratio is 0.7. So U.S. equities are 2.5 times more expensive for the earnings you get for the emerging markets as a whole. And is the risk 2.5 times as large? I mean, is U.S. not risky? I don't know. I haven't seen Bloomberg for the last hour or so, so I don't know. Maybe something less risky has happened in the last hour.